Hello everyone, myself Vaibhav. In today's session of Visual Jforex, I will be demonstrating to you how to design and develop the algorithm using the indicator block named Variance. This is the indicator which we use to measure the volatility if we want to see whether there is enough of momentum in the underlying instrument or whether it is just starting up fresh after having spent considerable time in consultation. We can take the help of this indicator block and trade as and when the momentum creeps in for the underlying instrument. This is the Visual Jforex board which has been developed by the Dukascopy Bank SA. Today we will be using the block of variance. It's taking a bit of time. Okay, got it. I had done the introductory session also in the prior series when I had explained to you how this indicator works, what is its functionality, and how the values are derived, and also its explanation for the input parameters and then the resultant output value. So in today's session, I won't really be going into details of its functionality, but I will take you to the charting for the variance. This is the USD JPY chart plotted on the 15-minute time frame, and here this variance is there. And if you observe, you will see whenever the spurt happens in the price, the variance value shoots up, and then in due course of time, as the underlying instrument goes sideways, again the mean reversion happens. That means it goes back to the level fairly close to where it started, and you will find this the case almost all the time whenever there is sudden sharp move. It can be on the either side. It can be a bullish move or it can be a bearish move. It doesn't really matter. What matters is that there is sharp move and the rate of change is a lot more to what we have witnessed in the recent time. You can observe this, and using this to catch the price action as and when it starts and when the momentum is strong. I think we can utilize this indicator. So today's idea is going to be simple. I will be looking at the variance values, but if you look at its values, the absolute values, you can't really make much sense, as these are dependent on the price value of the underlying instrument. So you will see that if we change the instrument, the output value for the variance will change. But all in all, what it suggests, what it gives us for utilizing is the change, and whenever there is sudden sharp move, the value shoots up considerably. So the logic behind today's algorithm is going to be that whenever we see that variance value is twice of its prior value, prior 15 minutes value, then we will look for the initiation of the trade. So the condition is simple, that as and when the variance value shoots up and it more than doubles, the minimum condition is going to be that it should be double the prior 15-minute candles variance value, and it can be on the either side. So to make sure that we are trading on the side of the action, I will also take the help of the historical candle, where we will also look at its closing and the opening price difference, and the variance will then come handy to define the condition for the volatility. As I said, we need its value to jump almost twice or more than that. So we will set this condition also. So here we will need a couple of variance block. Now we head back to the Visual Jforex board. We will need to take into consideration a couple of variance blocks of 15 minutes each, as we are working on a shorter time frame. So the 15 minutes, and one more will be needed. Then I will also have to change its look back period. So here it is. shift value of 1, it will take the last 15 minutes candle close variance output value, and here this will be shift 2. And before we get other blocks, here I will have to do the instrument subscription also, so as to make sure that we are logically sound. And for doing the instrument subscription, I will have to take the help of logical components, if else, and here we will define the instrument of choice also and the position amount as well. Here it is. Now for this session, on tick will be our start point, and we will first need to take the default instrument. Default instrument is mostly Euro USD for the Jforex platform, but we can change it to any instrument of our choice. And as I had said, we will be working with the USD JPY. So I will change this. Okay. And as we are using the on tick as our start point, I will use last tick instrument to make sure the trade execution will happen only on USD JPY. And here again we choose USD JPY. Okay, here it is. So the instrument subscription is done. And now we want to set another condition, which is position info, all position amount should be 0. That means there should not be any open or pending order on the account when the trade execution will happen for this algorithm. Now I will have to change the time period for the candle. It's going to be of 15 minutes. USD JPY is the default instrument. Shift value of 1, time period of 5, standard deviation of 1. So this is how the variance values will be calculated. Then to look at the price action, I will also need to take the historical candles, and for that I will rely on get historical candle block. We will need 8, 2 of 15 minutes each. So here I will change the time candle period to 15 minutes. Shift value of 1 and 2 respectively. 1 and 2. We will also want that price action, the momentum on whichever direction it is should be good enough. So we will also define some bare minimum difference between its closing and the opening price, and we will be trading only on the side of the trend. So if there is move on the upper side in the bullish trajectory, then we will look for the buy trade. If the price moves lower, then we will be looking for the sell trade. We will also take the help of get historical candles. 4 candles of 15 minutes each. We will utilize It's taking a bit of time. Let's see what's wrong. Server error. Oh no. I think there should be some problem of internet connectivity. Okay. So I have changed the connection. Pardon me for the trouble, for interruption. Now again we take historical candles. It's still taking time. Okay, now it has come back. Okay, now the connectivity is back, thankfully. And here, first we will look for get historical candles, 4 candles here. Candle amount, I will reduce it, or we can keep it as it is and simply uh, not change the shift value. If we were to use 4 candles, then the shift value should have been 1 to make sure that last 4 candles are being taken into consideration. Now that we are using 5 candles, we can include the current candle and then 4 candles before that. So that's also fine. The default period will need to be changed to 15 minutes. Shift value will be 0. Alright. Then this will be 10 seconds to pinpoint the exact entry and exit points. Value of 1. This also 10 seconds. And shift value of 2. Okay. So this will be the blocks which we will use to gather the information to see what kind of price action is happening, and then these 2 indicator blocks to look at the values and to see whether there is enough of volatility, and then execute the trades as and when the conditions are fulfilled. So in today's session I will be signing off here, and in next session I will define the conditions which we are going to use for the execution. So we will be carrying out multiple calculations to set the conditions, and then we will define the buy sides as well as the sell side for the algorithm. So that's it for the day. If you have any idea or any query, you can write to me in the feedback. And please, sorry for this trouble, the interruption because of net connectivity. And Do subscribe to the Dukascopy webinar channel to stay updated on the market developments. Thank you all for joining in. See you tomorrow. Goodbye.